Hello, everybody. This is Harry Boxer, a technical trader. And today I'm going to talk about analyzing early price and volume action and early trend development to be able to pick the winners in terms of day trading. Now, the same kind of patterns that we're going to talk about today also apply for swing trading and intermediate trading, and I'll show you examples of that a little later on. But let's just say that it's important to develop a disciplined and focused approach. In the more than 45 years I've been trading, especially since I started the tech trader 12 years ago, I've noticed that my trading skills and more successful trading record have been greatly enhanced since I created a more focused approach. And this was mainly due to my subscribers and relying on my service for accurate technical advice. So I decided to create a very focused plan each night, because they say plan your trade and trade your plan, right? And one of the things that most people don't do is spend some time in the evening after the market closes and go over a lot of the patterns that are that developed during the prior session as to whether or not they could be possibly setups for the next day. Consolidation patterns that didn't break out that maybe is set up for a gap up the next day or a follow-through session. I love when stocks are trending in channels over a 5 or 15-minute chart and create 1-minute day trade patterns. In the very early action, I'm searching for important gaps of at least 4 or 5% and preferably much more. Early analysis of opening price gaps with volume, something I've coined the price volume surge, and how that relates to the previous trend as to overhead resistance and recent technical trends is a must. The opening gap price will often act as support for the session, and whether that holds or not early on in the session is most often a key in determining if a stock will then start up a tradable intraday uptrend or channel for the rest of the session and be a high probability scalp or day trade for at least that day. Usually if the opening gap price is quickly broken, as in a pop and drop scenarios, for example, a lot of these biotech stocks will pop and then drop and immediately break support. You'll see that occurs in some of the examples that I'll show you a little bit later. And because I'm going to be very, very fair with you, I'm not just showing you my winners, I'll show you some of the stocks that didn't work out today as well. And a lot of the examples I'm going to show you, such as the chart on the screen, Arena, is the stock we actually traded today. So if a stock does gap significantly and then holds that level, usually the development of an early uptrend will become evident in the first 20 or 30 minutes of trading. Sometimes longer. In the case of Arena, it took a couple hours for it to set up a coil here, and then it trended. Many successful traders I've known or observed over the years will not anticipate, rather they'll wait for the trend to begin to develop or the early patterns, be they flags, wedges, falling wedges, any type of consolidation continuation pattern. They'll wait for those patterns to break out. For example, in the case of Arena here, you'll see it pop, pull back, got narrower and narrower and narrower, quieter, low volume ebb right here. And that's where it started to pop with a little bit of increase in volume. That's where the trade began, about the $8 level. And reached 8.51 a couple hours later. That was a nice 6-7% trade. So some people will anticipate, others may choose to wait for that first pullback or early consolidation that I refer to as the boxer wedge, or a coil pennant flag. And that's the first consolidation pattern, no matter what you call it or what it looks like. In this case, a coil. But I always look for the gap up, the pullback, and then for some kind of development of a coil. And usually, I'm very excited about a stock when I see it holding the 50-period moving average. This is a 2-minute chart, but even on the 1-minute chart, as you can see here, the way it developed was similar, and it held near that 50-period moving average. I do look at 1-minute charts during the day, and sometimes I'll pull back and look at a 5-minute chart to see what the prior day looked like. And you can see that there was overhead resistance up here at 849. Therefore, my target on this one, even before it got up here, when it first broke out, was projected to be 845, 848, and it reached, I think the high for the day was, let's see, 851. So we were within a few pennies of getting the high for the day, but it closed very well, and you can see after hours it was firm as well. But let's get back to what I was referring to. One of my favorite.
Can I interrupt you for a moment?
Yeah, sure.
Can I interrupt you for a moment? We have a question, and I know you've asked that you wanted to mention to people that you will leave some time at the end of your talk for questions.
Right.
Okay. It is pertaining to what you're talking about now as to what you consider significant gapping. in terms of a percentage? And again, you can hold off till later, but I thought I would.
No, I might as well answer that now. I think I already said that. I'm looking for at least a gap of 4 or 5%, preferably 10, 20, or 30%. I want a stock that's gapping. And then I'm going to analyze the news to see why it's gapping. Some stocks are gapping for no reason or for very little legitimate reasons, and other stocks may be gapping because of a blowout in earnings, or four or five firms may have up recommendation to a buy or something like that. That happened in a couple stocks today. But I'm also looking for volume, because price without volume to me is just not tradable. One of the things I try to avoid, I keep getting ideas from my subscribers all day. One of the beauties of my trading room is that I have some very brilliant traders in there that see stocks that I don't. I have two eyes to watch 12,000 stocks. That's quite a few. But when I have a couple hundred people or 150 people, whatever the number may be in my room, and they're all watching the market, they often come up with great ideas which benefits the room. So that's the beauty of my trading room. It's that first consolidation pattern that's key for me. My favorite pattern is what we call a wedge or a coil. This is a coil. The reason why it's not a wedge is a wedge is more symmetrical and a coil is narrower and elongated. That's the way I define a coil and a wedge. But really interesting, it's something I want to show you here, folks, that if you use TCNet, and it's a terrific program, I've been using it for 20 years, and I'm one of the preferred speakers for Warden Brothers in the training seminars, is that a column here called Volume Buzz. Nobody has it. Nobody. Volume Buzz is simply at any one point in time, whether it be 5 minutes after the opening, an hour after the opening, or 3 hours after the opening, it'll tell you what the percentage of volume over the average for that period of time, that point of time in the day. It'll tell you what percentage of volume is trading above normal, or I think it's over the last 90 days. In any case, you can see in the case of these top 7 or 8 stocks, they had high percentage volume days on down days. Kind of interesting, huh? But also there was quite a few that had big days. Now, early in the session, this may be 2, 3, 5,000, 10,000. I've seen 30,000% above normal when it's a biotech stock that got approval that was a thinly traded stock that may be trading 8 or 10 million when it was trading 40 or 50,000 a day. So you'll see big percentage gains. And the reason why I look for the volume buzz is to see where money may be flowing early on in the session. If I see the pattern I like, if I see the volume I like, and I see this as being a big percentage of volume over normal, plus the percent gain may be 5, 10, or 15% early on in the day, that may very well extend. And that's where I get a lot of my trading ideas. TCNet is, by the way, it's a free program. The chart, the software itself is free. It's like, it's like 70 or 80 bucks a month for the data to update the system every day. But it's real time. They've just incorporated pre and post hour trading. You can see 4 p.m. here. This is where it traded after hours. So it gives you a really, and by the way, I love the black background with the colors. It stands out for you with the colored bars here. Some of the up days and down days and unbalanced volume line. These indicators down here, money stream and balance of power, are proprietary to Warden Brothers. I highly recommend the program. I've been using it a long time. After I've done my early analysis using various tools that we just talked about, along with my many years of technical analysis and pattern recognition abilities, one of the things I pride myself on is recognizing patterns. I see them even before I draw the lines. But one of the things that several people at Warden Brothers have told me that they learned from me in doing my seminars is to draw these lines in. For example, this line here, this line goes back, if you look at the daily chart, all the way back several months. And note these declining tops here. That also came in about 845. So that's why that was a target for me today, because I knew there was overhead resistance up there. So what we did here is then drill down to the 1-minute chart, and you can see the patterns as they develop intraday. But we also have this line that was set from weeks ago that turns out to be not only a resistance level, but look how it thwarted the advance and knocked it right back. I find that very interesting. After I've done my analysis, and I will create a focus list. It's very important in the morning when I'm looking at 20 or 30 stocks to focus it down at 8, 10, or 12. I want to have a certain amount of stocks I'm following that's not too inundated for my people. It's also inundated for anybody to follow too many stocks at one time. Now, in the course of the session, when patterns don't develop, I'll drop them off the focus list. But for example, here you'll see that I simply flag, all these blue flags are stock on my focus list for today's talk, and I'll show you some patterns after I'm done with my little talk. But these are stocks that are either day trades or swing trades that I've initiated in the last day or several days, and we'll go over them a little later on. The most difficult task and critical task for traders is to create the focus list, because I find that by doing that, you avoid the pitfalls of many traders in the early session by eliminating from consideration certain lower price stocks, like under $2 or $3 that may be too thin float-wise, not have enough volume percentage above normal. And then you're going to be looking at the chart for analyzing overhead resistance. We're going to look at the trend lines and moving averages and where that all affects the price. And this way you can come up with more focused approach and a more defined approach for what you want to do with the stock once you bought it. Because the one thing most traders don't do that I highly recommend, and what I do in my trading room, when I recommend a stock, I give you support, resistance, and targets and stops. I'm not going to hold your hand and tell you what exact point to buy it. I'm not going to say buy it at this price. I'm going to say, here's your support, here's your resistance, it's a buy alert now, here's my targets, here's my stop. This way you can make some decisions if you want to even get involved. It's usually best to pick more tradable liquid stocks than that are experiencing big price volume surges and breaking out because of better market sponsorship, the ability to move in and out quickly and have bids and asks. You don't want to be trading a thin stock that may be difficult to sell. Institutions or institutional high volume traders most often will shy away from stocks under 5, and many will even avoid issues under 10. Also, depending on the news sources, traders need to determine if any news is possibly a key in the trend determining factor or a game changer. For example, in the case of a biotech stock, take a look at KERX, for example. Would you have to say that would you say that this move here was a game changer? Definitely the breakaway gap here with big drug approval news was a game changer. For the next 4 or 5 days, the stock rocketed from 3 to 10. And that's the kind of move we want to be involved with, momentum move. By the way, this is also a current idea of mine. I think the stock is going to work itself higher. We've seen a lot of stocks do that. SRPT was a beauty for us. Here it popped, and we got involved with this consolidation. When it broke out above here, that was our play. We had a swing trade there. It pulled back. It broke out again, and we actually got lucky because we bought it the day before, and it gapped up and went up from 13 or 14 to 45 in one day. Now, it's not usual, but it did happen for us. So my point about trading liquid stocks, for the most part, during the course of the session, you want to trade a stock that's got at least 400,000 or 500,000 shares, and many times 5 or 10 times that. You know, a couple million would be nice. Once you're armed with the proper technical tools and have done your homework, you can trade your plan and make some money. So quickly, are there any questions before I go any further? Richard, are you there?
Yeah, Harry, how are you?
Okay, I'm not seeing the questions, so if there's any questions you want to, for some reason I'm not seeing them. Sorry about that.
They're in the question section, and people have held off with their questions until
okay,
later,
good.
although I see. What are your technical tools? There's one question that just came in. What are your technical tools?
Well, I was referring to the, for example, on TC2000, and this is very important, I set up, and it's so easy to do, you just go into Easy Scan, set up your own scan, put any criteria you want in, and it isn't programming. I just put down leading percent gainers, NYSE, Amex, and NASDAQ. And this is the list that pops up during the course of the day. You see that the leading percent gainers today, let me quickly sort that. And in the beginning of the day, I'm looking for a couple of things. I'm looking for price movement, and I'm looking for volume buzz, as well as the percent gain. I want to see all of that. Then I look at the chart, and I want to see how that affects us. Now, this morning, I did give us a buy on the first pullback on this stock down in this range here, around the 49 area, with a target of 52.5. It didn't get there. It did bounce a little bit, and then it went sideways for 4 hours. Late in the day, it popped. What this tells me is that this is possibly a trade for tomorrow. Watch for this for a strong opening, and maybe a run up into that range tomorrow. That was what I would call an unsuccessful day trade. On the other hand, this was a successful one because it popped, gave you a little pullback, and then spiked up right there. And it formed a flag and stair-stepped its way up for the next 3 hours. That was a nice channel up intraday. And of course, once that channel broke here, either you were stopped out or you sold it when it reached our target at 29. It got up to 29 exactly. Now let's go over some of the day trades that we talked about today. This is just the percent gainer list, but I have a thing called the Tech Trader Universe, where in the morning I'm looking at stocks that are gapping up pre-market. One of the sources I use is briefing.com. It's a great news service. It's only like $19 a month. It gives you so much darn information you wouldn't believe it. And in the morning pre-market, it tells you what stocks are gapping up and the news on those stocks. And you can often do extremely well by just keeping track of those gappers and taking a look at the date, the chart, or whether it means it's gapping up or breaking out. Now in the morning, I'm usually looking at 15-minute charts so I can look at the pattern over a period of time. And I want to see if this gap up, which in this case was here, started to move and immediately took out resistance there, or gapped up to it and started to run. One of the reasons why I wanted to wait for the first pullback to see what developed. On the 1-minute chart, you can see that it developed a nice little wedge pattern here that broke out and formed a flag. There was a couple of chances to buy that stock today. Here's an interesting one, which is one I did not recommend. Why? Because the total volume for the day was only 412,000. Now that was 440% more than normal. But at the time in the morning, it was kind of choppy and a little sloppy. It did form a little rising or ascending wedge, and then it had a beautiful percent move from here, about 4.5. It went up to 540, 90 cents on this is a 20% move from here to there in 3 hours. Unfortunately, we talked about it and followed it, but I didn't put a buy alert on it, only because it was too thin. I do tell my people about stocks that I don't put buy alerts on because we follow them during the course of the day. Now, about every 45 minutes to an hour, I'll come on, I'll do a live video update and show the progression of the charts intraday. And I may tell people at some point, if this pattern is broken with any kind of volume surge, like in here, for example, it may be a buy. And sure enough, from this level up here, about 465, it was a nice scalp trade. Another one, Nautilus was one also that was similar to one of the stocks I just showed you, ININ. Notice that they both did the same thing. They gapped up, they coiled, and then they just went sideways for the rest of the day. Same thing happened with Nautilus, NLS. It popped, it pulled back, it popped, it formed a little wedge here. And I was looking for this stock to make a more substantial move, but I also told my people to wait. Why do we wait for this to develop? This is a perfect example why you wait for the pattern to break out. Because this one moved down, it didn't break support, but that little move down caused it to go sideways for quite a few hours until at the end of the day, it did finally pop. Notice the surge in unbalanced volume. For those of you who don't know what unbalanced volume is, it's the amount of upticks minus the downticks in terms of volume upticks and volume downticks. And at the end of the day, they plot that on a line. Notice that buying at the end of the day here, huge. I would watch this stock tomorrow, NLS, for a follow-through session, which could get it up to 8.5, 3/4. CLIR was a stock we also followed. It ran up, it pulled back, it formed a little nice wedge, it broke out, it formed a beautiful little pennant. It kept stair-stepping its way higher, and it went from this level here where it broke out about 9.25 to 10.39. Beautiful percentage move there. And I don't, for example, here's a perfect example of a stock that, even though I liked the way it looked, I didn't like the volume on it. the volume came in towards the afternoon, but in the morning it was moving up nicely. I chose not to buy it. You know, you have to be discerning about what stocks to trade. Here's another one. Remember what popped and formed a coil, but the whole day it traded 321,000. Now, if you bought it and just kept raising your stop, you'd be fine. But I'm looking for stocks that trade a little bit more volume. In the case of MHR, 5.6 million, up 11%. Look what it did early on. Popped, pulled back, popped again, didn't get through the high, pulled back and got very narrow, very quiet, and then here's where it popped, and it started to move. And then it pulled back and flagged, popped and flagged, and exploded into the close. Very nice move from about 305 up to 330 for a little scalp. IDT is another. This stock is very thinly traded, so I don't want to trade a stock that for the whole day traded 273,000. But even that, take a look at what the relative volume was. We have to consider relative volume. This is the biggest volume day of 273,000 that this stock has had since way back in December of 2011. Look at the beautiful base that it forms. You have to consider where a stock is at a point in time. It broke out, it pulled back and consolidated, it ran up to resistance, again, formed a wedge, broke out, retested, and here it's running again. So this is an old favorite of mine, but I'm choosing not to trade it just because it's too thin. On the other hand, HIMX is a superstar for us this year. We picked it here when it broke out. We picked it here when it broke out. And again here. We've made 3 trades on this stock in the last 3 months, and it's been beautiful. This is the company rumored to be a supplier for Google Glass. And as a result, you can see the beautiful trend there. Very similar chart is RVLT. We picked it here, here, and here. Each time after a long consolidation, got very quiet and narrow, the volume exploded. Here's a wedge, it broke out, popped, coiled, popped, and it's consolidating again right now. See it? This may very well reach a $6 level before not too long. My first target's 4.5. My second target's about 5.25, and then 6. But those are some examples of day trades. First Solar was another beauty for us. It exploded and pulled back. We gave you a buy on the pullback. Why? Because I felt like that was a game changer. It had a major announcement. The stock literally went from 26 to 41 in one day. But the consolidation was so bullish. It came on lower volume with increasing technicals. I decided to put a swing trade out at 37 with a target of 44. And went right up to that level. It kept going. It actually reached 47 yesterday, 47.78, before the earnings came out and the stock dropped back today. Selling news, right? Here's the bottom line, what I'm looking for intraday. I'd love to see a rising channel because that's the kind of stock when you're in a rising channel intraday. Like in the case of ACAD. I'm sorry, ARNA. There you go. If your stock's in a rising channel, you can ride it all day until that channel breaks. Here's your rising bottoms line. I told most of my people we had a target of 840.45. 848, something like that. It reached right up to 843, backed off, and I finally did reach my target at 851 before a big reversal bar knocked it back down. It's firm in the after hours today, but we'll have to just see what happens tomorrow. I just tell my people that one of the other things that people have a problem with is where to sell it. I always tell people, I'll give you an initial and then a secondary target. If a stock reaches its initial target, you can always help, or you should sell half your position. And then either raise your stops and keep a trailing stop, or just look where support is. In the case of ARNA, once it reached my target here, the stop would have been right about there. It never violated that stop. It didn't violate the trend line, and it kept going higher level. Now, it didn't reach my secondary target, which was 865, but it came down. It may very well get there tomorrow. But what I look for is channel ups. When you see channel ups during the day, a stock that channels like that, we've had so many great examples of that during the course of last week, even and this week. And then once in a while, we'll see a stock like this, PKT, which gaps up and then pulls back and does nothing for several hours. But it did consolidate in its little mini base. Then it ran up to that base and formed a little flag. I noted that to my subscribers. I told them if it should break out here, let's go for a late afternoon scalp trade. We did it. 14.15. My target was 14.50, 55. We got up to 14.59 and backed off, but it closed well too. So that's an example of some of the trades we like to put out on day trades and why. Sometimes they come late. A lot of times they come early. This one did not. For example, if I said buy the first pullback and it pulled back to support and broke it immediately, retested it and failed, I'd have been out here. I would have been back in there. The problem with very, very many people that I know, once they sell a stock that they lost money on, even if it's a nickel, they won't go back into it. I'm always looking for redemption. So let's go over some more of the day trades that we did today. Here's an example of a stock that is a swing trade of mine. I'll show you first of all why it's a swing trade. AOL was a swing trade. I told all my people when it gapped up here and consolidated for a few months, it was probably going to move again. It broke out here. It broke out there. We had a target of 40. It reached 37.90 and backed off. But look at for how many weeks this stock held support, broke out, retested. And when I saw this developing here, I put a swing trade as soon as it broke out, and so far it's working. I have a target of 44.45 on this one. IQNT is another swing trade of ours. They exploded on big volume and wedge for 2 days, and when it broke out here, I put a swing on it yesterday. I think the stock carries forward. I want to see more volume, but the technicals are excellent. The stock has moved out above resistance, and it's in the gap. A lot of times when a stock moves into the gap, it at least fills half of it, if not all of it. So what I would do here is tell everybody, take a look at the gap, cut it in half, go back to your 5-minute chart, and there's my first target, about 6, 10, 15. Second target, 7. I'll also look at trends and channels. Channel tops are important. Here's a stock that's forming a rising channel. At the very least, it's a rising wedge. The first target for a scalp trade would have to be near 5 3/4, 5/8. That's a scalp trade. If it blows through that, you're looking at 6 1/4 roughly, or 6.15. And that's just how I set up targets intraday. A few more examples. Dish Network was a perfect example today. Excuse me, DirecTV, their competitor. Falling wedges are very interesting. People think that falling wedges are negative. I say they're bullish. Rising wedges are, they think are bullish. I say they're bearish. What it shows is a loss of downside selling momentum when the pattern narrows. And when it gets to the rising 50 on a 1-minute chart, we often see this. For the rest of the day, that stock was firm all session. And when it broke out here, around 60, I said look for 2 or 3 points. It got up to 62.07, so we got exactly 2 points on it. That acted well today. Look at URBN today. Perfect example of what I'm talking about in terms of day trade channels. It gaps up, it creates a little falling wedge, halts the decline at the 21 period moving average. I use, by the way, 10, 21, and 50 period moving averages. When it pops out of there and then form a quiet, look how narrow and quiet it got in here, very quiet at the apex. That's what I call the low volume ebb, EBB. Like the ebb and tide. If you get a low volume ebb, it gets very quiet and then starts to pop as volume increases. That's my buy. We put a buy out at 42.5. We went to 43.80. Nice little day trade scalp. We talked about Reed. A good example. Arena was terrific today for our subscribers. SGY. Here's another example of the pop, the pullback, and the channel up all day. When a stock channels, you have nothing to do except keep raising your stop all day. Where's the stop put in? When I see a stock do this and then it breaks out, what I immediately do is I put a stop across highs and lows. That would be my stopping point if that line breaks. Or across these tops right in here. Notice it didn't break anywhere all day. There's another stopping point. The stock acted beautifully all afternoon and kept channeling up. That's what you want to see when you're looking at an intraday day trade. The best part about day trading, folks, what is it? At night, you're in cash and you can sleep well. You don't have to worry about the market gapping up or gapping down. And a couple more examples. We